Thank you very much, Mildred, and good morning, everyone. It feels really good to be back to Kampala. On behalf of WSBI and on behalf of the Scale to Save program, I would warmly like to welcome you to this event. WSBI, the World Savings and Retail Banking Institute, is the largest global platform of savings and retail banks. It was founded in 1924. And financial inclusion has been at the heart of our operations, latest since the early 2000s. When I joined WSBI in 2006, 1.3 billion accounts were offered through the network worldwide. Today, more than 15 years later, the WSBI network offers some 2.5 billion savings and payments accounts through its network of members. And very soon, we will have doubled the number of accounts offered through our network of 6,760 savings and retail banks around the globe. Many of them on the African continent, where WSBI counts on member institutions in 20 countries, 6 of them here in Uganda. I would now like to take you on a little journey with me. And this is WSBI's journey in making small-scale savings work. Back in 2008, the Bill and Melinda Gates Foundation asked WSBI what it would take to double the number of accounts held in the hands of low-income people at 10 member banks in 10 countries across the globe. 7 years later, in 2015, we had managed to bring 5 million low-income people into formal savings by providing expert advice, research, and coaching to these financial institutions. At the same time, we realized that banking the most vulnerable, such as women, farmers, young people, refugees, is easier said than done. We had made great progress in bridging access gaps by establishing agent networks and digital banking facilities. But at the same time, we realized that sometimes the real doorstep service offered by field officers, roving staff, or digital links, as Centenary Bank calls them, is the more convenient touchpoint for low-income people. Back in 2015, we at WSBI understood that banking people and having alternative distribution channels at hand is just not enough. We must also encourage people to actively use their accounts and better understand what people are using their accounts for. Active account usage matters to us. We truly believe that only when we can get people to regularly set small amounts aside and to save for various lump sum needs, we will help them to become more resilient. And only then, when we can encourage people to make small payments and build up their savings regularly, there will be a business case for small balance savings. Not just for financial institutions, but also for agents, off-takers, so nearly everyone along the value chain. We have to move away from the idea of financial inclusion in terms of products and channels towards financial inclusion, or inclusive finance, as we now call it today. We have to understand financial services as an enabler to adding value to people's lives, and this is what we call customer centricity. Customer centricity has become a buzzword, and I believe to all of us, but sometimes it is just a buzzword and the concept is not fully understood. Think about the analogy of customer centricity in Luo, Luganda, and Ryankole, and I hope I'm pronouncing that right. What would that be? We all want to add value to people's lives. Wanting to add value with the help of financial services sounds like an honorable goal, doesn't it? But how do we achieve that? With that question in mind, we at WSBI embarked on another program partnership in 2016, this time with the MasterCard Foundation. Reason for being here today. In 2016, Skill to Save was born. Skill to Save means micro savings for maximum impact. Skill to Save also means that we want to continue helping financial service providers to scale viable business models for reaching out to small balance savers. And at the same time, we want to allow low-income people to save conveniently. And as a new aspect, and as an overall impact goal to the Scale to Save program, we wanted to understand the extent to which savings contribute to well-being and resilience of people. So we set ourselves out to test ideas and solutions with different market players and in very different markets. Uganda is one of 5 markets in which Scale to Save operates today. And our Ugandan partner institutions, Centenary Bank, BRAC Uganda Bank Limited, and Finca Uganda, are 3 players with very different institutional models. Variety matters to us. There is no one-size-fits-all approach to inclusive finance. And we at Scale to Save love testing a variety of solutions. Now let me say a few words about what we mean by convenience. It is foremost linked to quality of service, price, but also security and ease of access, something that we've discussed in the workshops yesterday. Convenience of financial services is all that, but has also become much more. We would like convenience to be understood as a contribution to people's financial health and resilience. This is the fundamental difference with the financial access agenda of some 10 years ago. And what do we mean by resilience, in particular financial resilience? Our definition is this to be a service that allows people to meet daily life cycle needs, to build assets to cope with unexpected expenditure and shocks, and to allow people to invest into their future. I'm sure you all agree with me that this is a goal to thrive for. Allowing people to save conveniently and build up a buffer to weather the storm seems more important than ever in times of COVID, increased in food insecurity and political unrest. We have seen enrollment and activity rates decline during COVID, but we've also seen a great deal of customer resilience, where digital services were on the rise, and where people were able to build up their savings, and that despite COVID. The challenge with our outcome-focused approach comes with understanding how shocks can best be mitigated and how we can really measure the extent to which financial services contribute to greater resilience of the most vulnerable. We at Scale to Save have therefore tasked ourselves to look beyond customer transaction data and conduct intensive qualitative research with customers to understand the impact on women, farmers, young people, and refugees' resilience. Yesterday's workshops are an example for that. To that extent, Scale to Save is a learning program that conducts research and shares best practice. We are grateful to the Mastercard Foundation for allowing us to do that. And we are also a happy member of the Mastercard Foundation Savings Learning Lab that is led by Itat. So to summarize, when we today look at achievements of our work, we also look at the quality and not just at the quantity of the financially included. According to the last FinScope survey, at least 54%, so 10 million Ugandans, report to save or put money away, but only 10% of these access formal banking. So the banks, the post banks, and the MDIs in this room, according to the last Uganda National Household Survey. And only 6% of these are said to be women. And there is still a high number of Ugandans that claim that they do not save at all, or they save at home, or at a secret place, or with a VSLA, because they're facing formal or social barriers that we as an industry have not yet managed to overcome. This is a challenge and an opportunity at the same time. to address these barriers, to discuss opportunities, but also to celebrate our achievements. We are coming together here today and tomorrow. We wish to discuss with you, hear your stories, your concerns, and share ours. This is the opportunity for the Scale to Save partners and member institutions of WSBI, member institutions of UBA, AMFIU, and FITSPA, to share their journey in serving low-income people in Uganda. And this is also the opportunity to hear from some of the MasterCard Foundation Young Africa Works program partners and many other financial service providers and stakeholders that we have engaged with along the way and who share the goal of inclusive finance and of creating opportunities for the most vulnerable. Today and tomorrow, we will hear from the Scale to Save partners Centenary Bank, BRAC Uganda Bank Limited, and Finca. From the other WSBI member institutions, Pride Microfinance Bank, Postbank Uganda, Finance Trust Bank, and Ugafode. And we will also hear from our East African neighbors and Scale to Save learning partner, Kenya Post Office Savings Bank, from Equity Bank Uganda and Stanbic Bank, from Future Link Technologies, Kilimo Trust, and MTN, from UNCDF, and from the other financial inclusion initiatives such as AGRA and PSCPU. We're also pleased to have so many of you with us, and we look forward to hearing your stories and how your work is making a difference. So let me highlight that we are extremely grateful for all the support that we have received in preparing this event, from FSTU, UBA, AMFIU, and FITSPA in helping to prepare, and to get so many stakeholders mobilized, and I know that there are still a few on their way. Last but not least, our deepest thanks goes to Bank of Uganda and to the MasterCard Foundation for supporting this event. It is my great pleasure that Michael Atinji Igor, the Deputy Governor of the Bank of Uganda, will deliver the keynote today, and that Adrian Bukenya Mulinwa, the Uganda country head of the MasterCard Foundation, will do the closing tomorrow. So my expectation is that during today's and tomorrow's event, we will all provide food for thought for Uganda's new financial inclusion strategy, and that by the end of tomorrow, we will conclude with a call for action for more meaningful financial services that contribute to the resilience and empowerment of the Ugandan people. With that, I'm ending my note. I'm wishing all of us a very successful event and look forward to hearing from many of you during today and tomorrow. So thank you very much, and back over to you, Mildred. Thank you.
Thank you very much, Rosalina, for that, and talked about very key issues that people are saving, but where are they keeping the money? I do remember a story that was covered in the media. There's a gentleman, I think it was in eastern Uganda, who saved about 3 million shillings, but kept the money somewhere in a small pot in the house, only for the time that he needed to use the money, found that the rats had eaten up the notes halfway, and it was another cry to be able to have his money back, his savings back. So people are saving, but what are they using their savings for? And also on the aspect of there's no one size fits all, I think I totally agree. This is based on research that you will need to find out if I need to target maybe market women, the strategy I'll use for them is not going to be the strategy I use for tuk-tuk drivers, is not the strategy I'm going to use for maybe taxi touts and something like that. So research is very important. But allow me once again discomfort you, Madame Rosalina, and I will request you to come and invite a keynote speaker, please. If you don't mind, come back.
Okay, I'm still learning. So please, ladies and gentlemen, let me formally invite, and it is my great pleasure, Michael Bukenya, Michael Ego, may I say that, to the stage. It's a great pleasure. Please come to the stage.
I think my takeaway from this meeting is that I have got a new name. I'm not called Bukenya. Thank you very much, Weslina, for that name. I'll keep using it. Ms. Weslina Angelo, the Program Director, Scale to Save Program, World Savings and Retail Banking Institute, the Chief Executives of the stakeholder organizations, distinguished participants, ladies and gentlemen, a very good morning to all of you. Let me first of all start by thanking Ms. Weslina Angelo for inviting me to speak at the opening of this inclusive knowledge sharing event by Scale to Save program, a partnership of the MasterCard Foundation and the World Savings and Retail Banking Institute. The event theme, Building Resilience and Economic Empowerment for Women and Youth, captures the defining element of surviving and thriving in this era of COVID-19 pandemic. That is resilience, the ability to take a hit, regain posture, and keep moving ahead. So, the pandemic has revealed the most vulnerable people and enterprises by testing their resilience to shocks. Women and youth are especially exposed. And in a youthful nation like Uganda, with a huge share of economic informality, it's plausible to say that this event will speak to the needs of most Ugandans. Thanks to the Scale to Save program for working towards establishing the viability of the low balance savings accounts as a key intervention for building the resilience and empowerment of women and youth who are predominantly engaged in informal work and are either largely unemployed or underemployed, respectively. The underlying reasoning is that financial inclusion builds the resilience and economic empowerment of the most vulnerable in society. There lies a hypothesis about financial inclusion causing economic empowerment, which is verifiable through surveys and tools such as randomized controlled trials. It's really my sincere hope that the numerous sessions during this two-day event will delve into evidence-based experiences and practices underpinned by robust research that may inform the evolution of the national financial inclusion strategy. At this point, I wish to share some recent findings that may well be known among the audience, especially my friend Joseph from the FSDU, and then pose a question or two. Well, 39% of Uganda's population survives on subsistence activities. This is outside the money economy. 20.3% of the population was in poverty in 2019-20, and 51% of the economy was attributed to informal activities, at least in 2017-18. Now, FSD Uganda's survey during the COVID-19 pandemic showed that 2 out of 3 respondents would not raise 115,000 shillings, that's about $30 in 7 days for emergencies, and an overwhelming majority borrowed from friends and families in the early months of the pandemic. And that the median amount that people had at their disposals was a meager 4,800 Uganda shillings, which is about 1.3 US dollars. Only 10% of Ugandans use banks as their primary financial service provider, with 40% of the poor and 47% of the middle income earners relying on savings group. So, given this picture of structural financial inclusion, of structural financial exclusion, should we be focusing on women and the youth, or the men as well? In other words, can a tripod stand on 2 legs alone? Has Scale to Save convened us here to attempt to make a 3-legged stool stand on only 2 legs? Ladies and gentlemen, consider this. There exists evidence all around us that women face barriers that keep them shackled in poverty. The World Bank's Women Business and Law Projects of 2022 report revealed that women have 3/4 of the rights that men have, and that women still do not have the same rights to inherit property in 75 countries. The cost of starting a business is particularly very high for potential women entrepreneurs. Gender roles assign farm work, child care, and domestic chores to mothers and girls, almost by default, thereby limiting them to informal, unpaid work. Fewer women than men have access to mobile phones and internet. Also, youth unemployment in Uganda has been estimated in the high double-digit levels. If really the youth are our future, then I'm very afraid that it looks bleak if we don't change the course. Abhijit and Banerjee and Esther Duflo, economics Nobel laureates, in the award-winning book, Poor Economics, explained why the poor need to borrow in order to save. Leveraging financing beyond women's saving groups, whose loans are constrained by the size of contributions, requires access to formal financial services. Yet, traditional credit requires a bank account and a possession of a collateral security. Savings requires earning disposable incomes fast. In my view, the system is rigged against the disempowered women and youth. When you consider these observations about our lived reality, you start to see the imbalance that Scale to Save is attempting to address here today. The extent of financial exclusion of women and the youth tantamounts to trying to balance the tripod 3-leg stool on 1 leg. This is unsustainable in a country that is working towards socio-economic transformation. It is little wonder that His Excellency, President Yoweri Museveni, has expressed a dissatisfaction with the financial sector by stating that the financial sector is key to sustainable economic development through mobilization and use of domestic savings and investment. Unfortunately, the sector is not reaching to its full potential and is far away from playing its dual role in bringing prosperity to all Ugandans. Our work in the financial sector is clearly cut out for us here. In the words of the former UN Secretary General Kofi Annan, rest in peace, the great challenge before us is to address the constraints that exclude people from full participation in the financial sector. Together, we can and must build inclusive financial sectors that help people to improve their lives. Ladies and gentlemen, I am pleased to participate in this event because the Bank of Uganda shares the objective of democratizing access to and empowering the users of financial services, not least by championing the National Financial Inclusion Strategy and through our strategic plan and operations. But like the multi-legged stool, it will take contribution of all the stakeholders and partners to bring about universal financial inclusion. Within our mandate, the Bank of Uganda is committed to playing its role in democratizing of financial inclusion, including through undertaking pertinent reforms and initiatives such as 1, the ongoing amendments to the agent banking regulations to promote access to banking services at an affordable cost, especially in rural areas. Amendments of the Micro Deposit Taking Institutions Act to allow MDIs to onboard agents, promoting infrastructure development and interoperability, including the establishment of a national switch to support affordable retail payments, ensuring effective implementation of the National Payment Systems Act 2020, including promotion of innovations through regulatory sandbox framework aimed at promoting digital payments and lowering the cost of transfers, among others, expanding the coverage of credit reference bureaus to include other credit providers, thereby reducing information asymmetry in the credit market, scaling up financial literacy and digital financial literacy across the country, and strengthening constructive collaboration with key stakeholders, including fintechs, supervised financial institutions, government, and development partners. Let me say that Bank of Uganda is most proud of the block allocation innovation under the government agricultural credit facility that we administer. Block allocation facilitates credit to women and youth based on unconventional collateral like movable property, inventory, furniture, and even the character of the borrowers. We are working with the regular financial institutions as well as payment system operators and service providers to promote e-payments among other initiatives for enhancing financial inclusion. So, while the key mandate for Bank of Uganda is price stability and promoting of a sound financial sector system, we extend that further, that this should be done in support of socio-economic transformation in Uganda. Because having price stability, a sound financial sector, is the bedrock for us to advance socio-economic transformation through financial inclusion. And we are working together with the different stakeholders to ensure that this becomes a reality by ensuring that there is an appropriate regulatory framework and policies in place to support the different players in the sector, given the different needs that society has. And that's why in the revision to the Bank of Uganda Act that is now taking place, we are emphasizing this aspect of socio-economic transformation through financial inclusion. We want to ensure that banking services are delivered to those who are financially excluded through the provision of digital savings credit. We do not need more bank branches. Countrywide, we need more banking services to reach the people. It's therefore on this note that I want to emphasize the fact that the numerous sessions during this two-day event will delve into evidence-based experiences and practices underpinned by robust research to inform what more we as a central bank can do to support this cause. So let me just conclude then by saying that I would like to thank you for taking your time to participate in this empowering knowledge sharing event, and I wish you all the most fruitful engagement today and tomorrow. I thank you for your very kind attention, and God bless.
A bigger round of applause to the Deputy Governor. He's asked very pertinent questions, and I am definitely sure that those are going to be answered in our discussions that are coming up pretty much. Of course, we cannot make a three-legged stool stand on just one particular leg. But in our next, before we get our plenary session, financial institutions are supposed to be run. You deal with what the customer needs are, and then you tailor something that will be able to address that. A discussion about savings as the backbone for resilience and job creation. But let's first pay attention.
We were not saving in BRAC until it became a bank. We benefited a lot from saving. From my savings, I have been able to take my children to school. Capital I get for my business. I was able to buy cement, dough, and finish them. I'm a landlord because of BRAC.
One of the three banks that are directly working with the Scale to Save program, among others, the Finca as well as Centenary Bank. So probably if you ask, I'm pretty sure that discussion will also be going into that direction, because we have the Uganda Bankers Association right in our midst for the 2 days that will be savings as the backbone for resilience and job creation from the implementer as well as the policy maker they're supposed to be dealing with. And the Deputy Governor hinted on that just a little bit. Would like to take this directly on. Mr. Joseph Lutwama, who is the Director of Programs at Financial Sector Deepening in Uganda, who will be taking on this discussion.
As well as Grace from PSFU. I know that the Governor needs to go quickly, but I request that you spare a few minutes so that the audience can be able to three-legged stool. So we want to hear a bit more on that. So allow me to invite the Deputy Governor from Bank of Uganda, Grace from PSFU, and we'll discuss on how we can leverage savings as a tool to build resilience as well as create employment opportunities for women, youth, and men. I will begin straight away with the Deputy Governor, as well as financial stability. And many times we see the Bank of Uganda in the press issuing their monetary policy statement every other month. But you have also hinted on another side of the bank that is focused on social transformation and how you are amending the Banking Act to actually include that aspect of the bank. You shared quite a number of initiatives that the bank is currently doing to advance that social transformation. Things like expanding the agency banking network, things around amending the MDI Act, and a whole lot of other initiatives. We want to ask the audience to know a bit more of some of these initiatives. What opportunities do they present to the market, and how do we take advantage of those opportunities? For instance, you talked about the CRB and why we need to extend the CRB. At the moment, it's only, I think, commercial banks, credit institutions, and MDIs. I'm not sure whether MDIs have access to the credit reference bureaus. So what opportunities does that present, especially in light of the discussion we're having this morning?
Thank you very much, Joseph, for the question. Let me attempt to answer them. Let me begin by emphasizing what I said. that what we need now is not more mortar and brick bank branches, but we need more banking services. And here the role of technology comes in. To date, okay, technology comes in and also the agency banking comes in. Let's look at what technology is doing. If you look at what the telecoms are doing, the likes of MTN, Airtel, they're partnering with a number of commercial banks to provide a number of services, including savings and credit. So I don't need to look for a bank branch to open up an account. I can open up an account on my mobile phone. So I don't need a branch in my LC one level in order to have a savings account. As long as I have a phone, I can have a savings account. If I want credit, you hear of all these credit products that are being given by the mobile phone companies in conjunction with the various commercial banks, right? So in that case, right, I don't need a bank to be in my parish to open or to access credit. I know it's micro, but like we said, one by one can increase. The Chinese have a proverb, a journey of 1,000 miles starts with a step. So I think we are moving that direction. So if you look at agency banking to date, I don't know how many agents we have. I think they're close to 20,000. If I'm right, I need to check my statistics, but there are a number of agents that are transacting on behalf of banks. You go to all these small trading centers, you find agents there, all right? They receive money, they pay out, all right? So that is encouraging very many people, all right, to join banking services without really having a bank nearby because these agents are there. Unfortunately, these agents are only limited to commercial banks. So we want to extend it to micro deposit institutions as well so that the coverage is enriched. And therefore, it goes back to what I said earlier on. We need more banking services without more brick and mortar bank branches. And in this way, we are likely to have more people enjoy banking services. And particularly the small woman or the small trader, a woman selling vegetables in, what is this market called? In Kalere, all right? Able to save her day saving with an agent bank near her, right? Or, wherever you are, okay? You are able to mobilize, you are a kiosk trader, you have made your 30,000, you don't want someone to visit you at night to claim all that you worked for, right? You just pass by the agent, leave the money there, all right? So this is what we are looking at. And so that's in as far as the agency, the agency banking is concerned, and the technology to increase the services to the people, banking service to the people. I don't know whether I have forgotten the second question.
No, the second one was around the work that you're currently doing on amending the Financial Institutions Act to allow for extension of Credit Reference Bureau services.
Yes. Thank you very much, Joseph, for reminding me on that. Yes, we noticed that, look, we have a number of youth out there leaving universities, leaving colleges, and what have you. We are not creating enough jobs for these young people. And we say that they are the future. How can we support them? How can we empower them? So, what we're trying to do is we realize that price stability is good, a sound financial sector is good, but it's only a strong foundation for socioeconomic transformation. So, how do we take advantage of the price stability that we have restored? Okay, we've had price stability for a long time now, but to what extent is that supporting socioeconomic transformation? We are working towards ensuring that the financial sector notwithstanding all the challenges it went through in the recent past, remains robust and sound. That is being worked on. So, with that environment in place, how can we attract more people into the financial sector? How can we get more of them out of the informal sector? You have to ask yourself the question, why are people in the informal sector outside the formal financial system? One, if you look at the years when Uganda had very high inflation, there was no point of putting money in the bank account, all right? Because inflation will erode it. I would rather buy a female pig. That pig will, in about a year, give me about 15 piglets. And if I sold those piglets, the rate of return would be much, much higher. So people in an inflationary environment went into inflationary hedges, buy land, buy this, to hedge against inflation. But because you have lowered inflation now, so, to where it is the low single digits, and the deposit rates are much higher than the inflation rate, then there's an incentive for people to save with the financial sector. And if you save with the financial sector, you are improving on your chances of even borrowing money to expand on your business and everything. And likewise, what we're doing now in terms of socio-economic transformation through the implementation of the National Payment Systems Act 2020, we're encouraging very many providers, particularly the fintechs, in things like the mobile monies, the telecoms and other fintechs, to offer digital financial products like savings and credit extension. And once you are able to establish a track record through that, you are able to increase on your capacity to access more credit to expand your business. And that goes to the question that you raised earlier on, that the Credit Reference Bureau right now is only limited to commercial banks. But if we can have records from the borrowings from the telecom companies, the borrowings from all the other fintechs, your savings behavior, all that information is put into an expanded Credit Reference Bureau, then we are encouraging more lenders to support more people in the economy than just restricting credit reference to only what commercial banks are doing. Bring in other players who have your credit record so that we can share that information to see how borrowing can be increased. So the emphasis on socio-economic transformation is through the implementation of the National Payment Systems Act to promote financial inclusion. And under the financial inclusion, we are allowing regulatory sandboxes. If any young man there was done IT who wants to come up with an app and we do not know what it means for the regulation, they can come and try to experiment the application of that app in a controlled environment, and once we are satisfied that it can meet the regulatory standards, you go and roll it out. We have now rolled out some of those apps, and that is encouraging more people to support the society.
Yeah, that is quite a lot. I'm sure the banks in this place will now be able to have the comfort of offering credit even without collateral, because then you'll have sufficient information on different borrowers. I think one of the biggest issues has been multiple borrowers, and there's a lot that you don't see, and therefore the one way you can protect yourself from what you don't see is by loading up as much collateral as possible, so that in the event something goes bad, at least you can recover your money. But now with a more transparent credit information market, where you can be able to cover the entire almost spectrum of the financial system, I think that should be able to create more opportunities, even for innovators, around a wide range of non-collateralized credit solutions. So I think the challenge is really back to us. The central bank is providing a conducive policy, legal and regulatory environment. It's up to us to take charge of those opportunities. One more question, the Deputy Governor. The issue of consumer protection. We are moving in a digital environment. We are so much used to engaging with warm blood. I can go to the bank and air out all my frustrations, and I can actually receive an instant response. In a digital world, yesterday we were listening, some of the banks were sharing some of the products they're rolling out, where I can open up a bank account in just under 5 minutes and begin transacting. And I've not faced anyone, I've not interacted with anyone on the other side. And tomorrow, if something happens to my account, whom do I go to? I cannot complain to my phone. So how is the bank thinking about that? And what sort of support do you need from the market to work together to solve this big animal called consumer protection in an increasingly impersonal world, much as it brings efficiency, but it also comes with some of the risks?
Thank you, Joseph. Under the National Payment Systems Act, we have drafted some regulations under consumer protection, and I think they should be going to the Minister of Finance to look at before being submitted to the First Parliamentary Council for the drafting. Right, we've done all that, and I think that should be able to speak to the issue that you talked about. I think, I don't know, I need to get the facts here correct. I think a discussion has been held with the key stakeholders as well to get their views regarding consumer protection in this digital world. So I think those regulations will be coming out shortly once the Minister of Finance does present them to the Council.
Right. Now to Grace, you as private sector foundation, you are the voice of the private sector. You bring together different associations that speak to the needs of the people who actually make things happen in the real economy. And one of the critical things that has always come to the surface is lack of access to capital, or access to finance has been identified as one of the most critical bottlenecks for the private sector. We just want to hear from your experience. Why is this the case? And you as a voice of the private sector, what do you have to speak to the banks and the financial institutions that are here in terms of the needs? What are those things that the businesses grapple with in accessing finance? When they walk into a bank and they are denied access to credit, what are some of the things they struggle with that the banks need to know so that together we can figure out sustainable solutions that both serve the market as well as the industry that actually makes the jobs and is able to provide all these opportunities that we are talking about?
Thank you very much, Joseph. Good morning, everyone. My name is Grace Nshamere Gwaku. I am the Chief Operating Officer at Private Sector Foundation Uganda. Like Joseph mentioned, we are the apex body of about 300 business associations. And our job is to strengthen Uganda's competitiveness in the private sector and also engage and influence for an enabling business environment. We have the privilege of working with MasterCard Foundation. We are the anchor partner for MasterCard Foundation on two huge projects. One addresses some of the things that the Deputy Governor spoke about. The other addresses some of the areas that Safe to Scale was talking about. The first one is creating employment for the youth and women. We have the privilege and responsibility of working with lead firms in Uganda to create employment for 300,000 youth and women. And the skew is 70% women. I know that DG mentioned that we need to address the men as well, but at the moment, that's our obsession. And we can have a chat about the men maybe during the coffee break. These days, there's a big advocacy for the boy child. The other one is, the other big intervention that we are working on with MasterCard is to drive the recovery, economic recovery recovery and resilience of our businesses. They've been amazing. They've pumped in about $8 million to help our SMEs get back on their feet. And that includes some of the challenges we're battling with. We're addressing things like financial literacy, making sure that we have tools that our business people can use to manage their finances. But coming back to the question, Joseph, Why is it a problem for our business owners to access finance? The interest rates are high. During COVID, Bank of Uganda actually had amazing interventions. They were very accommodative with the banks. They reduced their interest rates. And the banks did not transfer this to the wananchi, the muntu wa wansi. It was shocking. I remember, I won't mention banks' names, but interest rates were still at 18%, 19% during COVID, and then they were harassing people to pay. And I know I have people that lost their jobs that spoke to the banks and said, listen, I'm out of a job right now, I can't pay. And the banks were not understanding. You know, that story in the Bible. The central bank had been generous with the banks, but the banks did not cascade the benefit. So we have that challenge. I think it's general in Uganda, enforcement. We have great policies, but sometimes they're not enforced. That's one of them. The other one, when you say what are businesses struggling with, I'm going to borrow that example of the vegetable vendor. KCCA, I like to say Jennifer was amazing because she chased the vegetable vendors out of the central heart of the city, yeah? Loom Street, the people who used to line up there. And KCCA would chase them and beat them, and their stock would get, destroyed. They would lose their capital. It was not good for them, for their businesses. Very informal. The 50% that the DG was talking about, those informal guys who would just line the streets and you would even have nowhere to walk, were under a lot of, I would say, harassment from enforcement officials. What she did is she built markets like Wandegea or Wino and set the standard. Now, I happen to live on the outskirts of Kampala in Wakiso. We have, this private sector actually went and saw what she did in Wandegea. We have a market built in Nalia by private sector. Nice. With over 100 vendors. We park there, we buy our things, the stalls are marked. That vegetable vendor has been semi-formalized. She now has an address, she deals with you, you pay via mobile money, so there's a history of transactions. I think what is unfortunate for me is that lately I've seen, I would say, Asian partners coming in to offer financial services to these vendors. They borrow 100,000 shillings in the morning, buy their vegetables, trade, and pay 20% interest at the end of the day. So these Indians, Chinese come and collect the money at the end of the day with interest. Where are our banks? Interestingly, e-commerce is speaking to these women because some of the ladies sitting here don't have time to go to the market. They want to order online. So the informal sector is actually being formalized before us, which is exciting. But are the banks actively leading this? The banks are still asking them to fill 20 pages. Those are the barriers. Know your customer. The other day, I met a lady who's actually adding value to meat, slicing it nicely, packing it nicely, making sausages. And she said, they brought me so many pages and told me, sign here, sign there, sign here. I refused. It was too complicated for her. Why are we complicating it? We are asking banks. This is Africa. This is Uganda. Find us solutions for our market. You know our market. You know how we behave. We know how we live. Someone has an address, has a financial transaction through mobile money, like the DG was saying. You can get history. Okay, microfinance, please step in and come and help. Advance loans to these ladies because they're paying 20% per day. It's ridiculous. And I think this is where, when you say what are the barriers, these are some of the barriers that our informal sector faces. And I'm really passionate about the informal sector because every year, 1 million youth turn 18 and join the labor force in this country. They are not employed. They go informal. So do we have facilities? We've recently got a new sector as one of our sectors at private sector, the creative arts, the musicians, the artists. Now, what security do they need to give you to borrow? Not everyone has land. Not everyone has a land title. How do we leverage people's creative talent? In South Africa, for example, if you're an artist and you have paintings, they can use that. You can use that to borrow in some banks. Are we innovating enough as banks to make sure that we facilitate and make finance accessible to this informal sector. 51% is huge. It's a huge part of our economy. It's untapped. It employs 85% of our women. But how do we ensure that that lady who's doing deco at your wedding can borrow to grow her business? How do we ensure that that woman with a boutique online selling chitenji can borrow? I think this is where banks need to be disruptive in terms of product development so that you can grow exponentially. You can actually help us grow this economy exponentially by availing finance in an accessible format.
Fantastic. It's quite passionate from Grace. I think the common denominator I hear from your discussion is risk. The banks will tell you that the reason why I charge 20% is because the customer is risky. The customer is risky, and Dr. Tingego is also on their case that we need to make sure that you need to provide capital for more risky assets. So chances are that I'll steer away from the risky assets so that I can have enough capital to make good return for my shareholders. Quite conflicting goals, but how do you find that middle ground? I know the Private Sector Foundation has been doing quite a bit of work, I think, with the LEAD project to improve, I could say, the quality of these businesses so that probably they can be able to become less risky and probably they can be able to get. So I think until we're able to solve that puzzle of risk and we're able to prove that this creative arts person can actually be a better creditor than someone who has given you so many titles of land, it will be very difficult for us to convince the banks that these guys are not risky. Because it's common in Uganda, at least in my language, local language, I'm from Central, there's a terminology or a tagline that says that Kampala Sirizimbe. Meaning that the city is not just buildings. If you think you've just come to the city and you're still mesmerized by the good buildings, the big buildings, before you leave, you probably leave with empty pockets. So that is very common, and I'm sure seated on the other side, and I'm a banker putting on the banker's shoes, I'm not so sure when I give you money and there's nothing to hold on to, that will motivate you to always pay, that the following day I won't see that you're no longer there because you don't have an address, you don't have all these different things. Yes, in the interest of financial inclusion, I give you money, but I may end up running down and the central bank won't be very nice to me. They will just come and close my bank because the bad assets will be accumulating. So what can we do to address some of these risks so that then we can have a very good case before the financial system that actually the rates can actually be much more competitive and valuable for everyone? Yes.
So the issue of risk is real. And I was not saying that the banks should not take that into consideration. I would like to borrow from Equity. There's a reason why Equity has become an enigma in the banking industry. They took a risk on people and reduced the list of requirements, which is why they have grown exponentially. So maybe some banks can borrow a leaf from that, but also I'm asking and requesting banks not to bring practices, because most of them are multinational or Kenyan banks, for them not to bring practices that they are rolling out here. And I've worked for multinationals, it's best practice, it's standardization across the globe. But look at our nuances. As a country, we are different. There are some untapped sectors, like fishing. They don't bank, they go to the lake, they get their fish. After they get it, they sell it, they eat their money, they wait, they go back in the evening. That money is not documented. that guy could actually be harnessed and mentored and helped to formalize his business and start saving and grow, get a bigger boat. When you go to landing sites, the money that is there, that lifestyle there is crazy. Theirs is daily, eh? It's a daily income. And it's a lot of money, by the way, along the water surfaces. But it's not banked. So as we stick to our risks and our books and our P&Ls, we are missing an opportunity. There's money moving in the economy, and I think there was a question, where is it? Are people saving? Why aren't they going to the banks? I once opened an account for someone in the village. And then I checked 6 weeks later, nothing. And I knew they were making money. 6 months later, nothing. I asked, what's wrong? They said, the interest is even higher than how much I'm trying to save. You know, the charges are higher than the interest I'm making from my business. Yeah? Eventually, we saved the account. The villager did not see the benefit of creating an account. And I was trying to formalize them and say, start saving. Yeah? I went out of my way to open an account. I think I still have the card myself. The guy has never banked, but he's a millionaire. He has his money. Maybe he's one of those people Mildred was talking about who keeps the money in a pot. But they don't see the benefit because the charges are too high. So it comes back to, can we look at products for our people and tailor-make them to suit the needs of our people? Understand who these people are. These people are trying to make a living, they're trying to earn, and the young people don't have savings as yet. They need to get capital, they have ideas, but they cannot access the finances. We are not asking you as banks, and they are our members, we are not asking you to put money where it's risky, because we want you to be profitable, we want you to make money and to thrive so that you can keep lending. That's how we're going to grow. But we also want to formalize that informal sector, and we look at you for solutions.
That brings me to Zelina. You've done quite a bit of research on how to unlock some of these puzzles. Yeah. I know the costs to income ratio in this part of the world is quite high, especially in Uganda. I think it has been in the range of 70 to 80% for some, apart from the big boys that are in the ranges of 50 or 60 thereabout. So even the cost of running a bank is actually very high. So how do you address, and more so, the cost of serving the customers we are talking about now? I usually tell people that imagine a banking hall with 1,000 people, and of course this is just a case, each one of them just depositing 10,000 shillings. And you still have to go through the same paperwork, and probably what you're going to earn on 10,000 is really not much. And when you combine what you're getting from 1,000, probably it won't even cover a fraction of your costs. Compare that with dealing with someone who is going to deposit $1 billion. They probably won't even step in the bank, they'll just wire it. And you won't have to spend much, but the income you're earning from that will probably cover almost all your costs. So from a banker, on the other side, and I need to make profits and a good bonus, it makes a lot of sense in looking for the big boys rather than trying to spend my time. So with Zelina, from your research, how are you able to solve those puzzles so that you're able to deal with some of those costs while at the same time being able to be more inclusive and reaching out to what is perceived or is risky?
Thank you, Joseph. So what I'm hearing is that providing services to the underserved and banked to small businesses is risky and expensive. Yes, there is a point to it, but I think we have to move away from thinking that credit is the only source of income for banks, and that the poor and young people don't have the means to save. They do save, but informally. And we are working with our partners to encourage basic savings services that allow low-income people who do save informally, that allow young people who do save in the households. We did research that really showed that intra-household cash flow with young people between family members is rather high. We also see that the informal savings in the groups in the villages, there are huge amounts of funds floating around in these villages. So if financial service providers are able to capture these funds, are able to attract low-income people with tailored services, as you were saying. And tailored, I mean, not just by gender, but also by age. And gendered services does not mean excluding men. So we don't want to exclude men. But we have to use research to segment and understand how low-income people, small businesses, and here young businesses, young people, young women, young men, older women, how they're attracted to savings so that they start saving regularly and ideally through digital services that are offered to them so that the financial service provider can build a track record that allows him to offer other products and that allows him to graduate these people to a more general account that then offers the opportunity to provide credit. So Centenary Bank has a beautiful product that onboards customers instantly, digitally, even without needing an agent. And once the customer starts saving regularly, graduates them to a regular account, so that then there is an opportunity to offer loans. I think any young person aspires to become an entrepreneur, and there is an opportunity to already bank them at a very early age so that they can become entrepreneurs, successful entrepreneurs. And you were mentioning the financial education aspect. That is obviously key. We want to create digitally and financially savvy people, and we want to provide the business skills so that loans are less risky that are being provided to these people. And I believe this has to be an effort of the entire ecosystem. Financial service providers sometimes think they can do it all. But I think here partnerships with skill set building organizations that support us in the journey from creating financially educated people that are using our services to enable them to really build businesses that are less risky is needed. And Michael was saying that the regulations are on their way, that we need more agent banking services. We need to get out more to low-income people into the rural space. And yeah, we're waiting for the regulation to happen and for the micro-deposit institutions. But sometimes we don't need to wait. We can be creative. So Finca Uganda and Centenary Bank have proven that if we don't want to own it all alone, if we were to share more, share infrastructure, we can actually provide more people with services. So to explain, we're talking about a shared agency banking model that allows a micro-deposit institution that currently by regulation is not allowed to offer agency banking services to their customers. We provide this opportunity through sharing agents from a commercial bank. So I might have diverted a bit from your initial question, but conducting research is very important to help us understand what are the specific needs of the young women, the older women, young men, older men that we are serving. Because what we tend to do is to develop neutral products. And I was in a meeting with the new CEO of the Consultative Group to Assist the Poor, talking about women empowerment and what prevents women still from benefiting from more equal opportunities. And she said that if we implement gender-neutral services, gender-neutral regulation, this is actually being gender blind. It can be age blind if we refer it to age, because the different groups need specifically tailored services. And this is what research very often is telling us.
All right, thanks, Weselina. I'm mindful that the governor was supposed to, we've held him longer than we expected, but we allow us to release you, but we thank you so much for...
Okay, can I just say one thing?
Yes.
Thank you so much, Joseph. Let me just make it very clear that the tripod that I was referring to is made up of men, women, and the youth. But because of the disadvantages that the women and the youth are facing, it looks like this tripod is standing on one leg. So what can we do to make it stand on 3 legs? So that's why this workshop here, that is targeting women and youth, is doing the right thing in order to empower them so that the tripod stands on 3 legs. Okay. No, that Otherwise, thank you so much, Joseph. I do appreciate everything, and thank you for inviting me.
Yeah, we just have a few more minutes, and then we'll just open up. I'm sure there are bankers in the audience. You may need to step up and respond to some of the issues that have been raised.
I recommend to test, because we're talking about what still needs to be done, but